Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes here on Share Talk for Sunday, the 13th of September. Starting off with Afc Energy, where it's a good constructive looking chart here on the daily time frame with the shares bouncing off that red line there, which is effectively the old June resistance at 32.5 pence. So while we're above that area on an end of day close basis, looking for further upside up towards possibly as high as the top of the June rising trend channel at 57 or 58 pence as soon as the end of next month. Only really back below 30 pence, really delaying the upside scenario. Onto a rather less full chart than the one at Afc Energy. You can see that Calnex Solutions doesn't have much data. I suppose we had the starting gun on the real move north was that gap through 80 pence in the middle of last month, and since then we've progressed in a sort of sidestep fashion, which tends to be the most bullish that there is at this stage. While we're above initial December resistance at 112 pence, looking for the top of this notional rising trend channel as high as £2.10 by the end of next month. At this stage, only really well below 100 pence, really delaying the upside scenario, but obviously that 112 level reasonable as a potential stop loss at this stage. On to Empire Metals, where might be worth looking at the current setup that we have here. I've looked at this before in the sense that there have been opportunities for the shares on the long side at or just near the 50-day moving average. That's the blue line there. So we had that dip in July, another one in September just below the 50-day line, and again at the beginning of November. And hopefully now also bouncing off November resistance at 2.9 pence. We had a 3 pence low for the start of December, so that's useful as well as a support zone. And the only thing to wait for, possibly if you are cautious, would be an end of day close above the November resistance line and the 50-day moving average, now at 3.5 pence, ahead of a potential move to 6 pence as soon as the end of next month. Stop loss obviously back below 2.9 pence. Moving on to a stock which has been popular all year and is still gathering momentum, it would appear, ECR Minerals. Here we've got a situation where the shares have been in this rising trend channel for several months now. Floor of the channel currently around 2 pence, and a good sign at the moment is the way that we're finding support for the shares intraday around the 2.85 pence level, which is the old October peak, and obviously going down to 2.65, which was the July peak for the share. So at least while we're above that July peak, looking for around 4 to 4.5 pence over the course of the next 4 to 6 weeks. This stage are really back below 2.5 pence, really killing the idea of a fresh move to the upside. Next up, a stock which has been difficult to say the least, especially over the post-June period, with full storms and also just dead price action really either side of the 50-day moving average. That's currently around 15 pence. But we have had a notional breakout here of this June resistance line there. That's running at 15.5 pence, and really while we're above that on an end of day close basis, we are hoping for a move towards the top of the rising trend channel from March as high as 30 pence. Obviously, it's quite a punchy call given the way that the shares have done nothing for the best part of 6 months, but let's see if the trend line break does work as a potential momentum signal. This stage really back below 14 pence, and the uptrend line from March really delaying the recovery argument there at Futura. Had a request for IQAI, where the shares have obviously come back down from the multiple tops above 15 pence. There's an opportunity, I suppose, here that you've got the shares near the 50-day moving average and this uptrend line from October. So in theory, we'd hold the low so far for December at 8 pence. While there's no end of day close back below that, then there's a possibility of a bottom fishing opportunity for a 15 pence plus target. If you're cautious on the shares, you'd wait for an end of day close above 10 pence, which is the November resistance line, before targeting 15 pence plus for IQAI. Moving along to stock which I know has its fans, and quite intriguing in terms of the price action, this very, very slow grind higher that we've had for many months since March. Seems like an eternity, but I think we've got some resolution now in the sense that the shares are held above the old November 2019 peak around 11.25 pence for much of the last week, and while we're above the 11 pence zone, looking for a breakout here, hopefully as high as the September 2019 resistance line projection, heading up to 22 pence on a I suppose 2 to 3 month view probably would be more realistic given how slow the price action has been over the last few months, but 1 to 2 months, maybe the end of January if we are lucky in that situation. Another slow situation which may be ready to resolve itself comes in the form of Midotech Pharma. Obviously there were a few flurries and false dawns for the shares over the course of 2020, especially that one in July, which took us from sort of 20p to nearly 90 pence. Current situation is that we're in this wedge formation from July itself, and looking for a clearance of an end of day close, I think above the 200-day moving average at 30 pence would hopefully be the right trigger after the strong daily candle that we had for the shares on Friday. Sustaining 30 pence rather than just having a one-day wonder move above it could open up the prospect of a broadening triangle channel from July as high as 60 or 65 pence. Moving along to stock which I haven't looked at for quite a while, but looking quite encouraging. Petrotel Corporation. Here we've had a break of that resistance line from July, also breaking above the 50-day moving average at 9.5, as well as the weekly close through the 200-day moving average on Friday, above the 200-day line at 10.8 pence, looking for a top of April broadening triangle target as high as 20 pence, hopefully as soon as the end of next month. Just a couple of stocks to go now. First one, Pressure Technologies, another situation where we've broken above the 200-day moving average, in this case at 82 pence. While we're above that, looking for the top of that broadening triangle from June as high as 135 over the next 6 to 8 weeks, hopefully a bit sooner, but maybe around the end of January is a potential target there, while we remain above the 200-day line. Finishing off with a favorite, if you're a COVID person, I suppose, Synergen. Here we've got this falling wedge here from the middle of last month, or the early part of last month, after that vaccine-induced collapse. Probably now looking for an end-of-day close, minimum end-of-day close above the 20-day moving average at 91 pence. We already had a bull trap through that feature last week, so 90 pence plus required there. Otherwise, maybe wait for a clearance of midweek support last week at 94 pence before targeting at least the 200-day moving average at 107. But big positive, I suppose, in the near term is the way that we've had lower lows going into the beginning of December, but bullish divergence in the RSI window, so that it does suggest that there is an improving technical tone there for Synergen. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.